Gordon, thank you for joining us today.
Thank you for having me.
Gordon, could we start with you giving a summary of the trading for the period?
Well, if you remember, Hargreaves has 3 businesses, so let's just talk about those. First of all, we've got the services business, had a very strong performance in H1. Second is the land business. Now, by the nature of land, it's quite lumpy transactions. So in the first half, we've had very few transactions go through, but we're very confident that this is going to be the best year ever for land on the back of we have a number of transactions which transacted in December and January. And then finally, you've got the German business. And again, we've always explained to shareholders it has 2 sides to it. When it's trading at full speed, it needs a lot of capital, and therefore the cash is tied up in the business. With the slowdown, it's released quite a lot of capital and meant that we can increase our dividend on a sustainable level with the extra cash coming back from Germany. And that will be a feature ongoing now because we've finished a lot of capital projects in Germany.
Gordon, the services division was a standout performer. Moving forward, what are the key growth opportunities within that division?
Well, talking about growth, sustainability in the short term is HS2 has another 2 years to run. And then alongside that, there's 3 major projects that we're working on. One is Sizewell, so we're bidding for that. We're already doing some enabling work there, so we're quite confident of that growing into something else, more substantial. We're also preferred partner for Lower Thames Crossing. And thirdly, we've talked a number of times to shareholders about the relationship we have with Tungsten West down in Devon and the opportunity to be involved in opening up that tungsten mine. So I look at it and say we've got 3 irons in the fire. I'm pretty confident we'll get 2 out of the 3. If we get 3 out of 3, that would be great.
So moving on to the land business, what's the outlook for the second half?
Yes, well, we're very confident of the outlook for the land business, really because of 3 transactions. First of all, we announced the fact that we've sold the EFW site at Westfield, proceeds of just under 8 million. Second thing is that we have the Avant deal, which we announced, that completes in January. And finally, we've sold some land at Maltby near Rotherham to a host builder, which means this is going to be the best year ever for the land team.
Gordon, the 7 million contribution from HRMS, how sustainable is this moving forward?
It's a very good question, and I think shareholders will be keen to understand that. So HRMS has a trading business and the DK business, which DK is ring-fenced. So let's just focus on the trading business. This is at the bottom of the cycle. So this is the period where Germany is technically in recession, but they'll still be able to deliver a return to shareholders of about 8 million this year. We've toned it down to say 7 million's a bottom number. And if you follow the trend of the trading business, you'll see that's the bottom of the cycle. So we think it's very sustainable.
Now moving on to your renewables portfolio, there's been further development. When do you expect the first tranche to go to market?
Yes, a good point. So in terms of that going to the market, it's in financial year ending 25 for us. And then we'll see how the market reacts. But 25 is when we're going to market. The other developments really in renewables is the future beyond that. We'll look to go to the market with a further 2 to 3 tranches. So again, if you refer back to our Capital Markets Day, we're still bang on where we expect in terms of realisations, except the land that we own, typically up in Scotland where the planning environment is much more positive than England, we're able to announce that instead of having 800 megawatts of potential other opportunities, it's now grown to over 2,000. So we're in the right place up in Scotland. These are old coal mining sites, so they have good grid connections. So that renewables portfolio, if anything, has improved from when we saw the market 6 months ago.
Gordon, what developments have there been on your ESG strategy?
Well, the big thing is we've appointed our head of ESG. Now let's be very clear. I believe that our customers want ESG embedded in our business. And we regard it as a differentiator between us and our competitors. So we are not just ticking the box. It's a brand differentiator for us. The typical type of client that we like to work with, it's not all about cost. It's also about your ESG credentials. And that should allow us to improve margins. So this is not a tick box exercise. This is all about embedding it in the business to give us a brand differentiation.
So Gordon, what's the overall outlook for the group?
Well, we're very positive, as you can imagine. Services is growing, 3 big projects that we're in pole position to pick up at least 2, if not all 3. Land is going to have its best year ever. And the situation in Germany, now that it's stabilised and the main capital projects have been invested in, repatriation of cash, which has led to this 6-fold increase in interim dividend. And if you look at brokers' forecasts, it's looking at about 36p a share coming back to shareholders on a sustainable basis going forward. And then the other issue is obviously the buyout of the pension. Now, we hope to complete that in Q1. And again, that will take a burden of contribution of nearly 2 million a year, which we can then pass to the shareholders to underpin this sustained increase in dividend. So I'm very happy on the outlook. I think the business is becoming much clearer, much easier to understand, and the cash that we've always promised is now flowing back to shareholders. And hopefully, with going to the market with the renewables in 2025, there'll be a big realisation which will benefit the shareholders.
Well, Gordon, a very positive update today. Thank you for your time.
Thank you very much.